Hi, I wanted to take the next few minutes to talk about a few things with respect to financial planning and investments. So, with regard to financial planning, given that we are in these uncertain times, I would look at one's personal situation and look to see if you are in the right allocation. When I talk about that, I mean, are you invested according to your own risk tolerance and as well as kind of what your future needs are going to be? In these uncertain times, the markets have given us an opportunity to rebalance, and perhaps you have too much in equities or too much in bonds, and then look and see, are you comfortable with what it is, and then put it into areas that you think you are more comfortable in. I would also then look at this point to look at your estate plan with regard to your will, your healthcare proxy, and as well as any of the beneficiaries. You might want to revisit um, who is going to be receiving your assets, especially as things have changed. Well, most people have done their wills over many years. Another thing that we're advising our clients to look at is their retirement assets. And this time, you can convert your IRA into a Roth, given that we have lower values. Also, for those who are retired, you don't have to go and get your required minimum distribution this year. That could be a potential tax savings mechanism that you could use as well. Some people are also using this time to look at their charitable giving. There are a lot of different charities out there that need our help, and if you've got highly appreciated stock, this could be an opportunity to take advantage of gifting them and then also getting the tax deduction. A few other things that to keep in mind in terms of planning. If you have young children, this could also be a good time to fund their 529 plans ahead of just the 1 year, but front load it given that the market is giving us an opportunity to do that. Other things to look for is review your insurance needs. Things always change. Perhaps you need more or less insurance. And then another thing that is pretty obvious, but most people don't have time to do it, is to look at where you have loans outstanding. Perhaps it's mortgages or HELOCs. Rates have come down, and this could be a good time to talk to your bank and try and get a lower interest rate. All these things are very important, but given we are in these quote corona times, one should look at them, put a plan into place, and revisit. With regard to investments, everybody has their own risk tolerance. Our view is not to sell and panic. Over time, markets do return, adequate returns, especially, for example, if you're invested over the last 20 years. Even with this downturn, the average return is over 7 years. The one thing that investors will miss if they're trying to time the market is that you have to be right twice, and secondly, when you miss the best 5 days over the last 20 years, your returns are cut by a third. Our view, again, in terms of investments, is that it should be matched to your own risk tolerance, to your own allocation, and really should be made at a time when you can actually survive the volatility like we're going through right now. History will tell you that every 18 months the markets correct at least 10%. And over the last 3 decades, we have now seen 3 bear markets with over 20% corrections. So really, investors should take that into consideration. And one of the things that we always talk to our clients about is to say, look, nobody can tell you what the market is. And Warren Buffett will be the first one to tell you. So our view is have adequate cash reserves, keep enough cash on hand for 12 to 18 months, just in case we get the corona times or the great financial crisis. and not to try and time the market, not to get too aggressive or too defensive, but really match your investment strategy with your risks and what your needs are going to be for not just now, but for the next few years. I hope this is helpful, and I wish everybody a safe and healthy year.